Good morning everybody, welcome to Stockradar, Stocks on the Move for another week. Today's date is the 15th of the 12th, 2022. We are getting closer to Christmas. We have a little bit of a Santa Claus rally, although we've had a little bit of a temper off this week. The sentiment's still pretty negative around the world, which is making me not feel so good, not so bad about the markets. So as the market has been rallying, hopefully it might continue. A few extra stock picks put in there, so we'll hopefully see a bit more of this rally. Well, my name is Richard Lee and I run the stockradar.com.au website for you. Don't forget to check out our trading centre where we cover all our stocks there and the ASX 200 for you to have a look at. It's been a weak week, if I can say that. Counter trend week of pause and consolidation for our stock picks and stocks on alert. What's those stocks that are consolidating? They're moving up into the what I call the neutral zone of my trend intensity scale. If I just show you my trend intensity scale, you can see here trend intensity. This is where I have my plus 10 to minus 10 scale. So we're sitting here in the neutral zone for a lot of stocks at the moment. They've come up from this area down here, they've moved into there, and if you look down here, it says here, stocks tend to move from one end of the scale to the other end as they follow the natural cycle of the stock market, downtrend accumulation, uptrend distribution, this sort of wave of things. So the trend intensity scale is a very good indicator of where we're at. So there are a lot of stocks moving into this neutral zone at the moment. So have a look at what I've got there and you'll be able to see some of those stocks that are moving. There's some quite exciting group of stocks in there. The top 10 trend intensity rating scales are those in the plus 7, plus 10 group. Things like A2M, which is doing well. Chorus, which you can see here, which is doing very nicely after somewhat of a bumpy start. New Farm, Spark, AMP is doing really well. Champion's doing well. Mineral Resources is doing well. Proesis, Qantas and QBE is coming as well. And insurance stocks, strange as it may seem after all our floods and whatever, that we've got insurance stocks in there. But anyway, that's a good sign. So hopefully that will grow, and not our top 10, but the stocks in the strongly trending zone will start to grow. Okay, so this week I'm going to have a little bit of a look at some health stocks, okay? There's some yes stocks, there's some frustrating stocks, there's some maybe stocks, there's some but stocks and some almost stocks. So it's a mixed group, but the demographic is very strong, so I thought we'd have a look at those because some of those have been sold off pretty badly. And we looked at some beaten down stocks a week or so ago, so it may help a little bit to see where we're at for there. Okay, firstly, let's get into the overseas markets to start off with. Dow Jones Industrial Average has had a pretty good rally for the last few weeks or a couple of months. It's sort of stalled a little bit here. We're in this high zone up here. We're up near the highs. There's a bit of congestion around here, but we've had some good volume here. It's tapered off a bit. It's above the moving average. The momentum is positive. All in all is pretty good considering what we've seen. This has been quite a strong rally we've seen the last few weeks. So just this little tempering today is not such a bad thing. As I said before, sentiment is still pretty negative around the world, which to me is a good thing. So we're sort of in an interesting position, not a long way from the highs in the Dow Jones. So we'll keep an eye on it. And our market's pretty similar. So we'll have a look at that in a second. The Nasdaq, not so lucky. It's trying to base out. It's doing all the right things at the moment, trying to create some sort of good support here. The sellers are selling, the buyers are buying, and that's a good battle of wills there. We're not seeing a lot of volume here at the moment. Maybe there's a bit of Christmas tapering off. I don't know yet. But we're still below the average, below the trend line. Momentum is still weak, but we are trying to hold this 10,000 area. So I'm hopeful there we might see something. It has come down 36%, which is a fair way. Okay, gold again. It's just floating up as the US dollar weakens. Not a lot of volume here. Momentum is still weak, and it's above the average. There's not a lot of constructive information actually about gold itself. It's more, I guess, the US dollar that's driving this at the moment. So I'm not really interested in the gold sector at the moment. There's been a couple of stocks that we have picked off, and they're floating up, so that's a good sign. Then we go to Dr. Copper, which is, it's again trying to create some sort of base around here. It looks a bit like the Nasdaq. It's just working very hard at the moment. We saw some good value on a bit of a rally here. It's tapered off a little bit recently. We're above the average. Momentum is weak. So it's a mixed picture, but it is slowly turning, and that's what happens. So have we moved from the uptrend distribution downtrend back into the uptrend stage? Well, so far so good. We haven't really broken down yet. So we're still holding this little line at the moment. Let's hopefully we'll continue to do that. We have some work to do to get through this area up here though, okay? So anyway, so Dr. Copper is okay at the moment, trying to rally. Crude, not so lucky. It did fall through some support last week. It's rallied again this week, but in the scheme of things, this trend is down at the moment for oil prices. So I'm not that hopeful. We've had some heavy volume there. The momentum is weak. It's below the average. So everything is pretty negative. Even if I was to run a trend intensity over this, it would be a -10 or -9 roughly. So as much as we hope, we like the rallies, the trend is down with lower lows and lower highs on Brent crude. Okay, our market, we've had a good rally. It's done very well. It's got close to the highs. It's moved up here quite strongly of late. We've got momentum. It's a neutral, just trying to turn positive there. We're above the average. We've got through this R1 level here. We've got some congestion to get through yet. This is the challenging zone we're in at the moment, and above R2 sends us off into new high territory. So, and we're not that far away from it. So realistically, we could be a bit more hopeful about what's happening there at the moment. Okay, so let's just go quickly to have a look at the stock pick count. It's flat this week at 34. No ins, no outs this week, nothing. So because it was a bit of a flat week last week, we didn't really see much action on the stock pick front. We've got 33 stock picks of 162 stocks, and there's one ETF of the 21 we cover there. So not a lot there. Portfolio update itself, well, the conservative is still 5 out of 20, which is 25%, which is not that fantastic really, and it reflects the 33 stocks out of 162 we've got. The breadth is not fantastic across the market, so don't get too enthusiastic, although we have seen a good rally in the index, which means the leaders are pushing the things higher. Things like BHP, Rio, and so even the banks, they've all been quite strong of late. Not that they've actually broken resistance, some of them, but they've actually been quite strong. And it's a bit like the index itself. It hasn't broken resistance, but it's moving higher, so that's been constructive. We don't need a lot of stocks for our Energizer portfolios. We need a few stocks, and we've got them both full at 100%. 5 is 5 out of 5, the 10 is 10 out of 10, and they're doing very nicely and generating good returns there over time. So that's the portfolio update for you, all looking pretty good there. Okay, so we might now get back into some stocks. All right, so let's just have a look here. So last week we covered all the leaders and the miners, a couple of leaders and the miners. This week we're going a little bit different. We're going to cover off a couple of leaders. CBA is one leader, which I want to have a look at. It's been a very interesting stock of late because it's actually we've been in this trading range for over a year now, between about 87 and about 110. But now we actually sort of, this rally has been very interesting. Sorry, this move up's been very interesting because it's been, you can see here that down here I've got the big volume on this rally up here, and down here there was also some very heavy volume. Up here we've got some big volume here again, and now we're getting a little bit of volume on the downside again. So it's been a real battleground, but we are going up, which is good. So again, as the market is still bearish, the probabilities of breaking up are probably much higher than they are of breaking down. So at the moment I'm quite sort of encouraged by that. Trend intensity rating is still 0, so that's my perspective barometer. I'm neutral pretty well on CBA until it breaks higher, but if it does break higher here, we have got the price above the average, we have got the momentum is positive, and depending on what volume does, we could get quite a strong rating. So it's certainly worth watching this, and it's by no means certainly this is going to come right back to S1 at the moment. It could break straight through, continue off. Stranger things have happened in our market, and the stock market is there to surprise us, which it does, because we know in the end we get it wrong most of the time in our minds, but the market tends to know a little bit better, as do our systems, processes and plans, which is what we use. Okay, so that's CBA. Macquarie's the other one I want to have a look at. It's come down a fair bit from it's above $200 down to about 150, so it's had a very, very healthy correction. It's come back to the old high here, which was hit in February 2020. We found support for here. Now we haven't really turned back up again yet, but we're looking interesting. We've got some good volume appearing down here. This is starting to ease off. We're sort of flirting with the moving average at the moment, but we've got this resistance level across here at about 183, which is stopping all the rallies all the way through here. But we might be getting, we've got a low here, we've got a new low here. If this doesn't create a new low, we might be getting something more constructive. So that's what I'm looking for at the moment from Macquarie Bank. Trend intensity's moved up to -6 from about -8, -9 when it was down here. So we are getting some sort of developing reversal structure above a long-term support level. So I'm interested to watch this one quite closely at the moment to see when we get some sort of signal. A breakthrough 183 will send us back up to around 213, worth a trade I would think, and maybe onward again. So Macquarie Bank is an interesting one, keep an eye on that one. Okay, now let's go to our health stocks. Now I said there's yes, maybes, buts, there's frustrating stocks, there's all sorts of stocks in this group, but it is a very interesting group to watch. For potential trades. So firstly we've got the two yeses. Prometheus has broken higher. Its trend intensity rating is +8 at the moment. Now it's come off in the last couple of weeks. I'm not too concerned. It's come up from $36. It's got up to nearly $60. So it's had a big rally over the last few months. We've had a little correction here. We broke through this trigger point here at 54.86, and now we've got a trend reversal that's occurred. So this is really, in the scheme of things, the stock is going up. Trend intensity is +8, it looks okay. All markets have corrections, so don't worry too much about that. If your stop gets hit, you get out, but for the moment everything is tidy and safe at the moment for Prometheus. So it looks okay. I mean, volume hasn't been huge in this one. It's not, it hasn't been. It's been good through here. Hasn't been a really huge one. If I blow it up a little bit, you can probably see the volume's a little bit better here. Again, not enormous, but quite solid through there. This is a good sign. This momentum index has been above the average, so that's why trend intensity rating is +8 on Prometheus. Ansell, we've got that sort of inverse head and shoulders type pattern, which we're sort of we're building on slowly but surely. Ansell can be a bit of a tricky, thinly traded stock sometimes, and volume has not been fantastic here at the moment. And the pressure is easing here on the momentum scale. We're turning positive here. We're above the average. We've broken resistance here. So trend intensity rating is +7 for Ansell. So it's looking okay still. So Ansell and Prometheus are the two that we do still hold at the moment, and they're looking okay. Now, if I now go down to a frustrating one, which is ResMed. Now we've held this one for a little while. It had a break up, but it really hasn't been doing a lot, which has been frustrating the hell out of me. But this is what happens sometimes. Everything behaves a little bit differently. So you can see here we've got a nice little break up here. All look good. We had a bit of volume here. Momentum was positive, and there was positive signs of demand in this rally here as well. Now since that break up, we've seen a lot of sluggish movement up and down. In fact, last week we had a big sell-off and big volume. But the good thing is this week it's actually survived that sell-off, and we'll have to wait till the end of the week. But if it holds this level here, and we get a bit of volume here, that might not be okay. It might be okay. Trend intensity has moved down to +5. We've broken down below the average. Momentum is slowly slipping away, but we still have a positive rating. So I'll still hold in here while it's above the stop. And again, this is interesting that we did get a powerful sell-off here last week on some heavy volume, but we've sort of held this bottom support area here, which is around $32. So it's just not happening for ResMed yet, but we're going to hang on there while our stop is still intact. We hang on there and wait and see what's going to happen. Okay, so yes, ResMed survives for another day, which is good. Okay, this one, well, Helios, we know it got a lot of benefit from COVID, but it suffered a big lapse since the start of the year, and we've had a very steady downtrend from 550 now down to about 270. So we've had nearly 45% off on this one, which is pretty enormous really considering, and it has been a steady trend of lower lows and lower highs, below the average, below a trend line. But we are moving toward, this is a support area. Now this will be, it's down 45% now. If it gets down to here, it's going to be down around 60%. We've still got some heavy volume on the downside. This is all very weak, so it's still all very negative. Trend intensity rating is -10, but because of this fall, you think sometimes, like those beaten down stocks I was talking about, there may be a good opportunity coming in here, a low risk opportunity. If we get down into this value zone of support, which is big long-term support for Helios, going right back a long way, there's a big support area there. That's the interesting zone for me. So again, a little bit of patience to watch this one, but as I'm covering health stocks, I thought to show you that, and you can see what I think about that. So we're not there yet, but we're heading towards this zone here. That may well be a good buy if you are a believer in Helios. Okay, so that's Helios. Nanosonics I thought we'd show you again. I don't actually cover this one in my ASX 200, but I did cover it for a while. I think the last time I covered it, I was up in the snow, which is quite a few months ago, and it was rallying up through here really strongly. And remember, the first step of a rally, I never buy the first step. I always wait for a pullback and get my trend reversal pattern. So this is developed over a period of time, and it takes a long time sometimes. So there's no real FOMO thing about things I'm going to miss out in these sorts of stocks. You must be patient with this one. So what's actually happened? It had a very fast rally onto very good volume and looked fantastic. But then it came back again. It did create a higher low, which in fact is a good sign, and it's now rallying again. So there is a trend reversal structure there in place. It needs to break above this R1 level, which will also put it above Well, it's above the average. It'll also put it above this downtrend line. There's not a lot of volume there. This is just starting to turn positive, so we are getting this turn. So all this pattern here is all part of a basing formation, and once this sort of breaks, the tendency is then for these sellers here to reverse and become buyers and add to the already existing buying here that's occurring, and then you get a good rally. So that's what I'm always looking for. So trend reversals do take time. This is still trend intensity rating of -2. It is picking up. It's in that neutral zone where they start to move up into that trending zone. So nanosonics is something that's worth watching. We've had this good pattern develop here, and it does take time, and it is a patience thing. So that's certainly another one worth watching for you at the moment. Okay, two of our big frustrating stocks has been probably Cochlear and CSL, which have really done nothing for so long. Cochlear is still trend intensity rating of -6. Okay, now it's got this good support down here, S2. S1 has been very good, about 187, but we've got these lower highs, lower highs, lower highs. This is holding, this is holding. Inevitably, this often breaks down. So we'll have to wait and see what happens with this one. We can't imagine that would happen, but it could do, because there may be some other competitors coming to the market or new technology. Who knows? There's always things that can change on an almost guaranteed picture. So for Cochlear at the moment, it's still a negative picture. Trend intensity rating is -6, and it's a no-no. There's no volume. This is sort of clawing back to zero as this sort of goes sideways. And if this goes sideways forever, this will sit on zero. But for the moment, the trend is still down in Cochlear. So not really any inspiration for that stock at the moment. CSL is the other one, which has been stuck in this trading range for some time. Excuse me. So let's have a look at CSL. Okay. Here's our trading range. It's been in there for since 2020, 1, 2, nearly 3 years. Okay, between about 240 and about 340. Now, it's a big range, I know, but it's a big high price stock. So we've got some higher lows here appearing here, and we've got some resistance points here, which if it does break here, it certainly means it's probably going to test this R1 level. But I really need, because of this big range here, I really need to see this R1 break before I even get interested in this stock again on a technical basis, because this can still resist. There's a lot of highs through here, 1, 2, 3, 4, 5, 6 highs, and it still can't get through. So trend intensity rating is still 0 for CSL. So I'm not particularly enamored at the moment. We have got some volume that's appeared on this last pullback. This is a bit better, the momentum, so we may well get a rally, but this has got to get through this R1 level for me to be all excited for CSL. So that's that one there. So those two, unfortunately, a little bit disappointing. And one of the other leaders, which has been extra disappointing, has been Sonic Healthcare, which, I don't know, a lot of people like this stock, and it has performed very well over time, but for the moment it is well out of favour. It's down 33% since the highs. I'm just trying to blow this up a little bit. Okay, trend intensity rating is -9 at the moment. What's wrong with Sonic Healthcare? You would have to think something's going to have to happen, but for the moment, it's just not doing anything. This is lower lows, lower highs, lower highs. It is just going down, 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 down. We're in this S1 zone, which is hopeful at the moment. We might get a bit of support through here. Could be support, I'm calling it. Down 33%. So I don't know, but for the moment the trend is down, and thus I expect lower prices. The trend intensity rating is still -9 for Sonic Health. So it's a no touch for me on this one. So none of those big health stocks are really doing much for me at the moment. Okay, now we looked at Fisher & Paykel not long ago. We saw this sharp rally off this low here, which is very good. It's very good volume. But again, a bit like Nanosonics, we often get a sharp rally, and then that little bit of excitement subsides, and we get a pullback, and then we're looking for that higher low to occur and the trend reversal pattern to unfold. Because this has gone from uptrend to distribution to downtrend, and now we want some accumulation action to really put a base under the price so it can launch a big rally. So we're getting the pullback now, which is good. We saw the demand spike of volume, which is also good, and the demand and downside pressures of ease, all constructive, but it's by no means saying buy this stock at the moment. So it came down a long way, Fisher & Paykel, and it was very strange to see these stocks getting hit so hard for whatever reason, but they did. And now it'll take a bit of time, because when this market comes down like this, then there are always sellers waiting. People might have bought up here a while ago hoping for more of a rally in this are disappointed. And when you get good rallies like this, they knock them on the head pretty quickly, just getting out, just making themselves a bit safe. So this is a process that goes on while the trend reversal action occurs, and it's not until all those sellers are cleared out that the stock is likely to take off again. So Patience, watching Fisher and Paykel. Trend intensity rating is -4, which is better. Hasn't moved up in the neutral zone yet, so we're still fairly, we're just waiting and watching this one for the moment. Okay, so that's it, Fisher and Paykel. The one we did like was, which was I showed you last week, which is EBO Group. It's EBOS Group, I should say. I've got this little very light green here because we actually haven't really broken through convincingly, or we haven't got a signal to break through yet. We've got good volume, we've got good momentum, it's above the average. We just need this clear break. Oh, this is actually in the wrong spot. It should be at that high there, which is that high there. That's the high it should be. So that's where it should be. That's what we wanted to get through to get us to buy. It's going in that neutral zone, trend intensity plus to waiting and bubbling for something to happen there and for these buyers to come back in. Really at this stage we've seen no selling, which is probably a good sign that people aren't too keen to sell at the moment. So that's a constructive thing for EBOS Group. Okay, now just a couple of other stocks I want to go through today. We've got lots of stocks to go through today. It's like a pre-Christmas festivity. Domino's still doing its little thing. It's rallying, trying to rally. In the scheme of things, it's hard to read because prices are so high here. But it has come up. There's been some good volume here. Constructive signs again of a bottom here. We're flirting with the average. Momentum is still weak. There's all sorts of different mixed pictures happening here. So by no means is it a buy, but it's certainly one of those ones that I'm going to watch with you for a while and just see how it develops. Because when it does get on track again, you probably will see a pretty good rally in this stock. So, but we just have to wait. Trend intensity is still -8. Says no, don't touch just yet. Okay, another one we've looked at for a while has been A2 Milk. I'm just going to try and blow this one up a little bit so you can have a good look at it. Okay, so A2 Milk at the moment, you can see what's happened here. We had a trend intensity rating of +10 at the moment. We had a breakthrough up here, which gave us a buy signal. It took a little bit of sideways action here before the trend moved, and again a new higher low, which was constructive. And also we saw some volume start to push this stock nicely higher again. And momentum is starting to build again. So this stock has been a really good stock, and it's now jumping on a percentage basis. It's quite nice, this move here. I'm not too sure what it's done today. But A2 Milk has been a good recovery stock. It's come down from a long way up here. And it's a bit like Domino's, this sort of action took a while for it to happen. It started to fiddle around a bit. The buyers got on board, and then there was some sellers coming on board. So it chopped and changed a bit, but now you can just see for the last 6 or 7 weeks it's gone straight up and been very little selling. It's hit that stock. The sellers seem to have gone away. Okay, so that's the last one. One more stock for you, right out of my zone. It's just a simple new high strategy. Smart Pay, trend intensity rating is +10. We can just see this is just simply made a new high. It came back from 96 down to about 57. And since then we've now rallied back to here almost in a straight line on some very good volume, and it's now breaking through here +10. So for those who want to take on the risk of something like this, you can buy the stock on this one because it looks like a really good new high here, and may well, if we just look at the, if we go back a little bit here, you can see where it came from originally, which was a lot lower. So this has been a good correction. We've come back here, and now we made a new high. It may well be off again. So Smart Pay is one you might want to have a look at. So there's lots of stocks there for you to have a look at. Just to give you an idea, some of those health stocks there, CBA and Macquarie Bank are interesting at the moment. And there's plenty of other stocks that I've got on the trading centre there for you to have a look at, especially those ones in that neutral trend intensity zone that are doing pretty well. Okay, so now I want to get into trading tactics, and I think I mentioned at the start with my little heading there, Stockradar, stress-free trading, easy, fast and accurate. Now, that's what it's all about really. Trading can be as easy and hard as you want to make it, but I try to make it as simple as possible, and here's the reasons why. Firstly, it is as easy as ABC if you want to make it that easy, and that's what I try and do. It's simple and easy. It's not that hard. It shouldn't be that complicated. It's just a matter of building something into a trade plan that is meaningful, rather than saying, well, I'm going to look at this, I'm going to look at that, I'm going to listen to this guy, and you get so confused. So you really need those things to focus on to tell you what to do. Remember, know why you buy, and you'll know. Know why you buy, you know what to buy, know why you sell, you know what to sell. So take the decision-making angst out. No more decisions on the fly. We don't want to be in a situation where the price does something and I've got to make a decision. I need to have that decision predetermined. So I'm predetermining my destiny here by knowing when this happens, I know exactly what I'm going to do. Okay, and that's a really important part of trading, not making decisions on the fly. So our trade plan says, the Stockradar trade plan says, if this happens, you do that. Or if that happens, you do this. And it really is that easy. There's no grey area at all, nor should there be. It should be clear and precise as to what you do. And that's what I try and teach people. That's what they need to do. So there is one question and there is one answer. A right one and a wrong one. And you choose which ones you want to take. And a lot of people will take the wrong one, which is, oh no, I don't want to follow the plan, I want to do what I think, which is not really the right thing to do. That's emotional trading, and we know emotional trading is not the right way to make money. Okay? So, know the answers to your questions before they happen. How cool is that? How easy is that? It's like I said, stress-free trading, fast, easy and accurate. You know the answer to your questions before they happen, which is a really good thing, really good position to be in. So always be one step ahead, okay? Now, fundamental truth of trading is that you don't have to know what happens next to make money. And of course, nobody can know what happens next to make money, but you don't have to. You can still make money following your plan, following your trends, doing the simple things that you need to do. And that really is what it's all about. So stress-free trading, fast, easy and accurate. And that's really what it's all about. And you can see here, AMP is another stock which has also had one of these bottoming patterns. You know, it took a while. You know, it rallied, had a good rally, then came back, had a good rally, still came back a little bit again, high lows, and eventually we got the signal through here when the volume, moving average, and the break of this area here came back shortly, but then took off and has been very, very strong, and I think surprisingly strong for a lot of people out there, because there's been so much negative sentiment about these stocks, and that's what's happened, whether it's A2 Milk, Domino's, AMP, all these stocks that have been slammed down. They will have their day again, don't worry about that, as they always do. It's just a normal cycle of the stock market, but we just get a little bit afraid sometimes. But don't worry about the fear, just worry about your trade plan, because that'll teach you what to do. So, Stockradar systems, plans and processes sets you up for success, step-by-step process, which is what I want you to do, one thing at a time. You don't have to take in too much stuff. It gets confusing and it gets overwhelming sometimes, but it doesn't need to be like that. Trading should be simple. So what you can do for yourself is go and take a free 2-week trial of Stockradar, for those that haven't already, and come and see how it is we work, because especially in the trading centre, I show you every step of the way. Excuse me, I am a weekly trader, so each week I update my trading centre with stops, entries, exits, all so you can see exactly how I do it. It's all transparent for you to see everything there. So with a trial, you get full access to Stockradar. We have a trading centre, we have stock alerts, we have entries, exits, stops, we run portfolios, we have a newsletter and a blog with lots and lots of articles about trading, psychology, discipline, all sorts of things in there in the blog, and they're actually free, the blog. And also you get our special weekly YouTube update, and you get to see me chatting away to you for 20 minutes or so. So aren't you lucky? Anyway, so that's really all I've got for you today. I hope you have a good Christmas. I'll see you one more time before Christmas. But the market is looking interesting. So, as those stocks come on board, this is what happens at the bottom of the market. Slowly but surely, stocks will start to appear, and the breadth has been so thin of lately, we're going to have a lot of opportunities come on board over the coming months. So, newsletter was out last week. No, it wasn't. It was out a week before that. We are undergoing a major upgrade to our portfolio service at the moment, which all portfolio subscribers will find out about soon. It's going to be a really, really interesting update. So that's all we've got for you today. All I want you to know is trading is as easy and as hard as you want to make it. Okay, it can be very, very simple with a simple process. Okay, so remember to take the big view and don't get caught up in the day-to-day ups and downs of the market, because they will drive you mad. Okay, so that's what we've got for today. Stay safe, watch your trends, heed your stops. Give me a call if you need any help. I'd love to have a chat, and I'll see you all again next week for some more insights on what's happening on the Australian stock market. Thanks very much.